Hello there, my friends. Chris Marcus here with you for Inside the Markets. And today, excited to have a new guest on the show who's fortunately going to break down the crypto market for us, as Demelza Hayes of the Incrementum Fund in Liechtenstein has just put out a great crypto report. I read it again for the second time last night. And I appreciate Demelza's joining us from the Malta Blockchain Summit, where she was also recognized as one of Forbes 30 under 30. So really doing a lot of great stuff and digging into the cryptos a lot. So Demelza, thanks for joining us today. And how's everything going at the conference?
Thank you so much for having me, Chris. Well, Malta is a great place. This is my first time here, and it seems like they're really trying to attract cryptocurrency and blockchain entrepreneurs. So it's really exciting week. There's over 7,000 people in attendance.
Yeah, and you were mentioning that over there, a bit of a different environment than in the US regarding the cryptos, where, as you mentioned in your report, often a lot of the regulators and existing infrastructure are a little bit nervous about cryptos, yet sounds like a different environment over in Europe.
That's a great point. So I was speaking at the Federal Reserve Bank of Cleveland in late July on cryptocurrencies, and then I also attended an event with the SEC at Wharton in September. And my main impression was that the regulators in the US are a little bit less risk-loving compared to Liechtenstein and Malta. They're a little bit more concerned about the ability for this technology to circumvent existing regulations.
Right.
And at the same time, they don't want to stifle innovation. So it's a hard topic for regulators. And here in Malta and in Liechtenstein and Gibraltar, they're actually openly trying to attract business. So it's just a little bit of a different position.
Yeah, certainly that's the feeling I've got here, where it seems like the banks are in many ways afraid of what blockchain could potentially do, of taking away the need for a lot of the banking infrastructure we have. And so it's interesting, though, seeing how in other places that's quite a bit different. And perhaps to get into it a bit more, I know in your report you touched on the bear market. Obviously, the last year or so, we've seen the prices of the cryptos go lower. So maybe you could give an overview of, obviously there was some manic pricing last year, and where things stand right now from everything you're seeing.
Sure. So there's basically been 8 bear markets with Bitcoin since the beginning of 2010 that have had drops of greater than 35%. And currently we're in a bear market that's gone on for about 240 days, and it has had a drop of over 60%. However, in the past, bear markets were often great opportunities to get involved with cryptocurrencies, because the bull markets that followed had returns of hundreds of percent. So there was bull markets that had a 1,400% return, 300% return, and basically, over the past over the past year, Bitcoin has held steady at above 6,000.
Right.
So Bitcoin crossed the 6,000 mark last October, and now for over a year we've been above 6,000, and that seems to be a strong lower bound for the price of Bitcoin.
Right. And where do you see it heading from here? Obviously, there's this debate in the US. There's a lot of people who say cryptos as a whole are a scam. There's no value there. I personally disagree with that. I mean, it seems to me that, especially with all the dollars that go missing in the government and regulation in the US, it's essentially an honest accounting system where we actually see where the money goes and things don't disappear. In fact, there was I take CNBC with a grain of salt, although it was interesting. They had an article that 84% of companies are adopting blockchain in some fashion. And again, like you mentioned, I think it is a very different environment outside of the US. So in terms of the adoption, what do you see happening? And is this something that's here to stay, or?
Oh, it's definitely here to stay, in my opinion. So in Q2 of 2018, the initial coin offering market raised 45% of the initial public offering market in the United States. So if you take all the IPOs that occurred in the United States, the global ICO market was equal to 45% of that. And this number is growing every quarter. So basically, more and more people are issuing tokens in order to raise capital. That's one very valuable use case. Another very valuable use case, as you mentioned, Chris, is being used as a global medium of exchange and store of value. And there are more and more people that are using Bitcoin and other cryptocurrencies to store value and send value. So I think that in general, the future is definitely going to have some kind of distributed ledger money and distributed ledger capital market. I'm not sure if it's going to be Bitcoin, but I think that this technology is definitely here to stay because many investors are barred from entering certain markets.
Right.
And this technology allows investors anywhere in the world to decide for themselves if they want to invest or not. It also, there's lower transaction fees if they do decide to invest. So for example, if you want to trade stocks, when I used to have my account with TD Ameritrade, I think it was $7.95 per trade or something like that, $6.95 per trade. Now with ERC20 tokens, I can invest in a startup for fractions of a penny as my transaction fee. And I can trade stocks, I can trade, shares of these companies for fractions of a penny. Also, the companies themselves have lower entry to be able to raise capital. So if the company wants to raise capital through the normal process, it costs a lot of money. There's a lot of regulatory red tape. And with ICOs, any firm anywhere in the world can just go online and offer their product, their ideas to people, and basically get to business right away. And so I think that's definitely attractive for many people. On the other hand, being used as a medium of exchange is attractive. Prior to the last century, we've had gold as the global money. And a lot of people argue that that was the cause for La Belle Epoque in France, and also the Renaissance in different ways, and in the way that the capital markets formed in Europe. So I think that definitely having a global currency is something that's very attractive to many people.
Yeah, I appreciate you pointing that out, Demelza, because again, I find a lot of the coverage here doesn't actually get into some of the actual uses, where a couple weeks ago I had some money wired, ended up taking a couple of hours and was probably about $40 fee, versus with some of the cryptos. I'm a Litecoin fan myself in particular. You really, it ends up being a lot quicker, whether it's a couple minutes, and the fee usually is a couple of pennies. So it's interesting to hear you're actually seeing more adoption and actual use of the cryptos rather than just the holding, waiting for the price to go up, it sounds like.
Definitely. It depends on the coin. It does seem like certain coins are more designed for store of value, whereas other coins are more designed for medium of exchange. So for example, Litecoin and Dash are very interesting as medium of exchanges. Mm-hmm. On the other hand, Bitcoin is maybe more interesting as a store of value because of the high transaction fees. However, Bitcoin, currently it has such a large network of users, and it also has such a secure network because of the miners that contribute mining power to the network. It's very secure in the sense that it costs approximately $8 billion to attack the Bitcoin network with a 51% attack. Litecoin and Dash have a lower cost of a 51% attack. However, it's not necessarily a requirement to have such a secure network when you're just being used as a medium of exchange. When you have a store of value, that's very important that people cannot attack it. But on the other hand, that comes with a really high cost.
Right.
So yeah, so I think that there's different coins that are fulfilling different purposes, and it's going to be a very interesting future to see how this plays out on the market.
Yeah, especially because if, from my standpoint, if they continue to be adopted and used, that would have to affect the price at some point. Right now, it's almost, I equate it similar to a startup where, the products are gaining exposure, but we really, especially here in the US, we hear a lot of talk, but not actually being implemented and used. Although, as you mentioned in your report, and I've been looking at for a couple months, there is the rumors of an Amazon or Starbucks adoption. Curious if you have any insight on that. I've heard varying degrees of whether that's going forward or not, but certainly would seem to be perhaps the thing that would be able to catch the public's attention and get actual usage here in the US. So any thoughts on that proposed deal?
Well, I think that Bitcoin just has transaction fees that are too high, and I don't think that the Lightning Network is going to actually solve the scalability problems with Bitcoin. So it seems like if any of these establishments do begin to accept cryptocurrency, it's most likely going to be a coin like Dash or a coin like IOTA, where they have some micro payments enabled, where they can send transactions to firms and they can effectively have very low transaction costs. So I'm not really sure what companies will adopt these tokens, but I know that Dash is really making extensive efforts to try to get more and more firms integrated with the Dash payment network.
Interesting, because actually we'll be talking with one of the folks from Dash later this week, so I will follow up on that. One of the other things that you mentioned in your report that certainly for investors is a key question, you got into the valuation of the cryptos a bit, which certainly, again, whether it's you're looking at a startup or something where it's not quite an established business model with revenues yet, makes a bit of a challenge to figure out how much the thing is actually worth. Again, I know you talked about that in your report, which we can have a link to at the bottom of our interview so folks can check it out. It really was a great report you put together. And again, maybe if you can speak to a little bit of the valuation and how people are trying to get a framework might go about looking at some of these coins.
Great question, Chris. Well, okay, basically, people are trying to adopt traditional valuation models to the cryptocurrency market. So for example, you have fundamental analysis, where they're trying to basically look at characteristics and try to understand how cryptocurrencies, what is the actual value use case. Right. And within the fundamental analysis, you have relative valuation models, and then you have absolute valuation models. Relative valuation models are basically something like network effects, where they try to take, for example, Metcalfe's law and estimate the value of the Bitcoin network by looking at the number of people that use the Bitcoin network. Now, it's very hard to accurately estimate that because of the pseudonymity involved with this network. However, for example, what you can do is you can take the number of active user addresses per day, and this is basically accounts that are sending amounts. We can see this on the blockchain. So we can see how many accounts per day are active. And then what you do is you basically take that as the denominator, and the numerator would be the market capitalization of Bitcoin. And then you basically divide the market cap, which is the number of Bitcoins outstanding times the price, and then you divide that by the number of active user addresses, and then you get some kind of ratio. And now you can compare this ratio amongst all the cryptocurrencies. So this is a very interesting relative measure. And you can also compare it to Facebook, for example. So right now in our data analysis, we found that Facebook has a network effect ratio of 250. So the market cap is about 500 billion. They have 2 billion users approximately. 500 billion divided by 2 billion, you get 250. It's the same with Bitcoin. And Bitcoin right now is at about 30. So you still see a big difference between Bitcoin and other networks. On the other hand, you also have absolute valuation models, where they basically try to find a point estimate for the price. There's a very good website called Coin Fair Value, and they're basically trying to understand how velocity works with cryptocurrencies and how the demand for these cryptocurrencies will change over time.
Right.
And then what they try to do is they estimate what's called the target market. So they basically, the target addressable market for each of these blockchain technologies. So they'll basically say, okay, we estimate that if Bitcoin takes over 1% of gold's value, here's where the price would need to be. And then they basically try to estimate velocity and try to see what the price would be at.
Right.
On the other hand, you have, kind of technical analysis that's trying to be used to forecast price. However, I'm not a technical analyst, so I basically try to stick more to the network effects, and also a particular area that I'm researching at the University of Lichtenstein is hash rate. So, for example, I look a lot at how hash rate for different proof of work cryptocurrencies changes over time. Mm-hmm. Hash rate is very interesting because it's kind of a proxy for interest in that particular coin. The miners have to dedicate scarce resources in order to mine these coins, and they kind of have to guess which coins will be profitable in the future. On the one hand, you can say that this is a proxy, and on the other hand, when they contribute those new resources to the market, when they contribute those new resources to the blockchain, they are actually making that blockchain more secure. Right. Which is giving that blockchain more value, potentially, which should push the price up. So some of the research I've been doing is trying to unravel the endogeneity between price and hash rate, and basically try to estimate if price can be predicted with hash rate. And I've found very good results so far, very, very high correlation between these two variables. And it's a straightforward concept. You add more mining power, but the more mining power you add doesn't mean that the supply of coins increases, because like gold, if the price of gold goes up, people can go and operate a new mining operation. And so they can actually, dig out gold from the earth, let that gold hit the market, and that kind of is supposed to balance out. The price starts to go up, that attracts new entrepreneurs into the mining, or, more equipment, more investment, and then more gold hits the market. But with Bitcoin, no matter how many resources you contribute to mining Bitcoin, the supply over time is fixed. Right. So the only thing that matters there is how many people that are storing Bitcoin decide to sell when the price goes up. And that's another thing that you can look at. You can look at how old wallets are holding on to their coins, because we can see how often a certain wallet sends their Bitcoin. And a lot of the older wallets that bought into Bitcoin early on are still heavily invested. They're not letting go of their coins. And we can see this. So we can see what supply of old coins, so to speak, are hitting the market. And there's been some very nice research on this. It's called the HODL wave. And it was done by a company called Unchained Capital. And it's a very good analysis of how people are storing their coins when the price goes up still, and the mining equipment, the mining resources do not actually increase the supply. So it's a very, the supply of Bitcoin is very inelastic to changes in demand. And that really makes a unique environment for the price compared to other commodities.
Yeah, and it sounds, it's really interesting, because I haven't heard anyone here in the U.S. really look at it like that way and try and actually put some analytics and figure out in a methodical way how we can think about the value of these. So I guess that's why they had you over there for the Multi-Blockchain Summit. Again, I appreciate you being on here. And perhaps in wrapping up, is there a coin that people may not have heard of that you think they would be well served to look into? And then following that, if you could just let folks know where they can find you and anything you'd like to share about Incrementum. You're a great resource for this sector that has a lot of people confused. So there's a coin and how they can find you.
Yeah, I apologize, Chris, again for being so loud here. I'm just at this conference and it's very loud in the background. But in general, one coin that I'm very interested in, I've been interested in it for a long time, and I think people probably already know about it, is Dash.
Right.
So basically, Dash is going to be working on this release called Evolution. They are going to be changing a lot of things. One thing that's interesting is that they're going to now have account names for your wallets. And I think that this is going to be interesting because, you know, right now it's very cumbersome user interface for most people to send transactions with cryptocurrencies. And Dash has a very interesting solution to the scalability problem of Bitcoin with their masternode network.
Right.
And they also have a very interesting solution to this, you know, typing in long addresses that are not very easy for each person to type in. And there's going to be basically a way to save people's account names so that if you're sending transactions back and forth between a particular person, that's going to be saved in your wallet, and you're not going to have to deal with, did I make the wrong mistake now? Okay, and you have to wait 20 minutes and freak out for 20 minutes if you sent, you know, the price of a Mercedes across the Bitcoin network, and you don't know if you sent it to the right address or not. So that Dash is a very interesting coin. Now there's other coins that are trying to solve this blockchain interoperability problem. And I think that that's also a very fascinating line of research. One coin that I'm interested in is Polkadot. Polkadot, I think, is coming mostly out of the US, and it's a very interesting project, and I'm looking forward to more updates on that project once they've released kind of their blueprints. Yeah, and going forward, people can reach me on LinkedIn. I write a report for Incrementum and Bank Fontobel in Zurich, and the report is quarterly. It's available for free. And I'm also a teacher at the University of Lichtenstein, where I teach a course on blockchain technology. And I'm always happy to answer emails and work on research projects with people. So yeah, thank you so much, Chris, for having me on.
Yeah, Demelza Hayes, thank you for joining us. It's I think you may be the top crypto expert I've spoken with. I love how, I mean, it's clear you have the knowledge of what's going on, but also do a great job of explaining. I can see the teacher background coming in handy. And thanks again for making some time. I know you're at the conference, and we'll let you get back there, but thanks for joining us. I think this was valuable for folks. And again, Demelza Hayes from Incrementum, thank you so much.
Thank you, Chris. Bye.